All right, welcome to another episode. Today we have Charlie Burton, who is a leading trade educator and a professional money manager with over about 24 years of experience trading the markets. I'm curious to know, do you have sort of any, I guess, memorable loss? Like a lot of traders I normally speak to is that, they normally, I guess, blew up a couple of accounts in the beginning, or there's been a sort of a very big loss in their trading history that kind of taught them, and they kind of got that eureka moment. Have you had something similar, maybe in the beginning of your career, or even sort of halfway through your career?
Well, I mean, you're saying about a eureka moment. The eureka moment for me was in my earlier part of my career was when I, my account would go up, and then I'd get overconfident, and then I'd give back all the profits I'd made. And it was on this cycle of probably about once every 3 months. So trade the capital up, then get
Mm,
overconfident, and then start taking trades that wouldn't have otherwise been taking previously. And then you give the profits back. And so I was doing that for a good year or more. So I'd got to a point
mm,
where I had something and I was trading okay, but then overconfidence would take over. So my eureka moment back then was, well, if I can just be maintain that discipline that I had when the account balance was going up, don't allow
yeah,
myself to get overconfident, because every time I do that, it messes up. So
right.
I got better at retaining that discipline. That was
Hmm.
an aha moment. But as far as loss is concerned, yes, I've had my losses in the beginning, like most traders. But actually, I'd want to give you an example from recent history, which was 2018. Um,
Hmm.
in 2018, I was trading euro dollar a lot, and the euro dollar just went really choppy. Late 2018, it was in the autumn into the
Mm,
early part of 2019. It just got really choppy. If you look at a weekly chart of euro dollar, it was up that one week, down the next, up
yeah,
down
it
next.
was very choppy, up
It
and down.
was, and it just chopped me up. And so that was a period which was, yeah, after all those years, any trader, myself, it's going to happen to you.
Mm,
I have to always be humble in front of the markets, because you never know where your next big drawdown is going to be. And so that was a sustained drawdown from the autumn time of 2018. And it actually
wow,
took me till the end of 2019 to trade out of it, because
wow.
what I ended up doing was reducing my position size. And fun enough, from about the April of 2019, I got back in the groove. I just made a couple of adjustments. Ended up having a really good 2019, but I stayed at the very small position size. So I thought, I'll
Mm,
just keep it here. I'm not in a hurry. I'm just going to let it. So if I'd have started to increase the position size back, then it would have been a bit quicker. But I was not in a hurry to do it. So,
mm.
but yeah, so that in the recent past, was that 6 years or so ago, was a drawdown that, which is a good example, because it's one where, I was already, 20 years into the trading, and
Yeah.
it can still happen to you.
Exactly, exactly. Now, you mentioned euro dollar. Are there any particular sort of instruments that you prefer trading that generally sort of give you more opportunities than others? And are there any particular instruments or pairs that you sort of avoid trading?
Eurodollar is my go-to market, biggest, most liquid currency pair. I've been trading. It's probably 70 to 80% of my trading is on Eurodollar.
Oh, wow.
So it's a funny thing with trading. You've got traders who will trade all sorts of different markets all of the time. I'm one of those traders who will trade a very small number of markets, and I just quite like to focus. So I trade the
Mm,
euro and the majors, and then
okay.
I'll trade the S&P as well, or the Nasdaq. But the euro comes first, followed by, yes, I'll trade the Aussie dollar, the cable, whatever, but only the majors. I don't really go for crosses. Now and again, there'll be a major cross pair I might trade, and the stock US stock indices, and that's about it. But probably still 70 to 80% is euro dollar. But I've got a big piece of analysis on the euro that I've been trading since 2015. I'm still
Mm-hmm.
waiting for it to complete. So maybe if we interview again in 5 years' time or so, I'll
Mm,
say no. Actually, I'm doing 80% of my trading on something else right now. So yeah, that is where I spend a lot of trading time.
mm,
The other trades are that I'm trading are what I call vanilla trades, so they won't
mm-hmm,
ever be as big. The euro is where I do a lot more of that compounding type stuff.
mm,
Are there any markets that I won't trade? I won't refuse. We are. I mean, I don't like trading the highly volatile currencies. So
mm,
and some of the minor currency pairs. Too volatile, not enough volume, especially when I'm holding on to positions. So you wouldn't ever catch me trading like Turkish lira, even though you can
mm-hmm.
have some amazing volatility in other markets. I'm not that
Yeah.
fussed about that. I'm quite happy plodding along, getting into a position,
Mm,
and riding some trends when they emerge. And yeah, I'm not bothered about chasing volatility too much.
Interesting. Any cryptos in your portfolio or gold or anything like that?
In my portfolio, yes, I do have some Bitcoin, but and I do own some gold and silver, mostly silver actually, but I've owned that for years. That's physical, so I don't really, I'm not trading that. A
Mm,
lot of my traders are trading gold and silver, but the problem that a lot of the time have is if I know that I'm trading one of the major currencies like the euro dollar, and I know that I'm going to be stacking into it, then I
mm,
want to hold back some chips to be able to do that. So I'm not
mm-hmm,
going to go and trade euro dollar long, let's say, and then be trading long gold, long silver, long the S&P. It's all too
mm-hmm.
highly correlated. It's all risk on stuff. So
Right.
so a lot of the time, I'll have to pass up on opportunities, trading opportunities on other major assets like you've just mentioned, just because
Mm.
they're a lot of the time too highly correlated to positions I'm already going to be in. So I'm always having to look at that overall portfolio risk, really.
Mm, mm. Interesting, interesting. You're obviously pretty well known for your, live trade shows that you have in the London Forex show.
Oh yeah.
I'm curious to know, how did you sort of manage that? Was it difficult? Did you kind of feel extra pressure trading with an audience, and that you kind of have to be right, or like how was talk me through that experience?
Well, that was a few years ago now. I haven't done any of the live trading recently, just because I'd have to dust all of those elements of my trading off now. But yeah, so I did it 5 years for five. They only did it for 5 years, and I was fortunate to be undefeated over those 5 years.
Mm,
But I'd already been trading in front of live audiences before doing those live trade-offs. So I'd get invited to World Money Show and all of those types of events. And rather than doing an hours long presentation, I'd always rather just sit in front of an audience just do some live trading. So I was
wow.
already used to doing that anyway. And so by the
Mm,
time those live head-to-head trade-offs came along, it wasn't something that I wasn't used to. But it is a pressure. But again, I think if you're confident in yourself,
mm,
then you don't mind losing in front of an audience. So I never
mm.
minded if I was going to lose in front of an audience. I think an audience will forgive you.
Yeah,
I say forgive you, but they won't mind if you lost in front of them. They're just happy that you're willing to go and trade on a live account in front of them. So
exactly.
so for me, I think if you accept that you can lose in front of an audience, then there's less to worry about. And so that was
Mm.
my overall attitude towards it, really.
And how many times were you successful versus sort of not successful?
5 years undefeated
Oh my
down
God.
there. So yeah,
Not bad at all.
yeah, but
Nope.
yeah, do you know what? It's at the end of the day, it's over a fairly short period of time that you're trading in front of an audience, and so it's only one small snippet. And I'll always say, oh well, there's always an element of luck. So
Mm,
they were always on a Friday afternoon like February or whatever, and a number of years, funnily enough. on that particular Friday, it was always Canadian news that was coming out. It always seemed to be Canadian. Not every year was I trading the Canadian dollar, but there was a few of them that I just so happened I was trading Canadian dollar because there was news out. Another year I was trading against Tom Hugard and I was trading euro dollar
Wow.
in that one, and so it does vary. But yeah, always needed a little bit of luck, some news to be coming out and some analysis beforehand. So I would always analyze the markets the day before. So I'd already have a structure in my mind as to what's been going on going into the event. So I'd always already have a trade plan,
Mm,
knowing that, okay, if price does this, I'm going to be moving this way. So I'm not doing it
okay.
live in the moment. It's already been set out the day before.
Right, right, right. So you already had the sort of plan and the blueprint before that.
Correct. Yeah. Yeah. But
Gotcha,
like I
gotcha.
said, it's a funny thing. I moved away from day trading, again, just a personal thing, because I got to this point. I touched on this earlier on. Trading for me needs to be deeper than just making money, and I
Mm,
just found that day trading for me wasn't pushing me enough. And I want to
mhm,
be challenged, and I want that mental stimulus from trading.
mm,
And swing trading provided more, just purely for me, because holding on to a trade is tough, as you know. The
mm,
longer you
mm.
want to hold on to a trade, the harder it is. And
Yeah,
because naturally, as human beings, we want instant gratification. We want to do
of
something
course.
now, get out as soon as possible. Great, we get our reward. And
Mm,
so delaying that gratification is difficult. And so that's where I ended up wanting to go. Plus, with my business, managing money, I can't day trade and doing all that managing money as well. It's way too intense. So
mm.
it became another natural transition for me, to then just swing trade and say, do you know what? I'm getting too old for day trading now. I don't have the time. So it worked for me.
I'm curious to know, do you believe sort of having a community impacts a trader's performance or sort of mindset at all? Because obviously, this is a pretty lonely sort of business, if you will. Trading can be pretty lonely.
Yeah.
How do you think that sort of impacts a trader's performance overall?
What any trader, if they're on their own, or you talking about
Mm.
myself?
No, any trader really. I mean,
Yeah, I'm a real advocate of community, because you've already said it. It's a very, very lonely thing. When I
yeah.
left my job in 2001 to become a full-time trader, the number one thing that I hadn't planned for was lack of interaction. And
Hmm.
I'd gone from a highly interactive career in meetings pretty much every day, all day long, to then
Yeah.
sitting in a home office, just in the quiet, looking at some screens. And I hadn't, although I'd been swing trading for 4.5 years before that, I hadn't really accounted for just how that might affect me. And so I think
Yeah.
for a lot of people out there, it does affect them. And I think as human beings, we naturally need a sense of purpose. And I
Mm,
think if you are part of a community, then it gives you that element of connectivity that we all need to some degree or another in our lives. And that's why I have it, because it serves a purpose for me. I have that natural desire to want to communicate with people.
mm.
And otherwise, if I was just trading, I'd feel very lonely. And I know what it was like all those years ago. So yeah.
Mm-mm. So I guess, do you connect with sort of like-minded traders at, I guess, trade shows or, different type of groups or meetup meetings and stuff like that? How do you think one should go about to sort of meet other traders in the industry?
I think, yes, absolutely. For traders out there who are looking for communities, there's loads of communities out there. I've got a community, but and there's millions. There's bulletin boards. There's all sorts. So everyone can get what they want. And so, yes, trade shows are a good place to go, but there's loads of online communities that are available anyway. And I think it is important people pick up certain tips and tricks from other traders as well.
Mm,
So, and you can learn from other traders' mistakes. And there's people in my community who have been trading 20 odd years themselves, and yet they still want
Mm,
to be there because
mm,
they get, for the same reason, they get that sense of community. They want that sense of
right.
being around some other traders. They don't necessarily need me anymore. But
Mm, mm,
but for newer traders, then it can really help. We talked about earlier on about having a drawdown as an example. As you imagine you're, maybe a year or two into trading, you're going through a long drawdown or a drawdown period,
mm.
and you're completely on your own. You've got no sense of benchmark to know whether yours is a normal drawdown or exceptional or whatever. You're completely on
Yeah.
your own. If you're in part of a community, you can have someone might just someone saying it's okay, we've all been there,
Yeah.
is enough to lift someone, because half of trading is belief.
Yeah.
Belief is a massive part of trading. And if you've got people around you helping you to have that belief in yourself, then it's priceless, really.
Absolutely. No, I couldn't agree more. It's so important, at least with that sort of human interaction, because otherwise, I mean, you just kind of get clouded with your own thoughts, and sort of you start doubting yourself and stuff like that. So,
Yeah.
I'm a big believer in that. In the current, I guess, economic climate that we're seeing right now, with everything that's happening with gold, et cetera, and the volatility in the markets, I guess, what are your views on, the opportunities that lie right now in the market? What are you sort of looking at that might be, the bet of the year, so to speak, of 2024?
There's a few. I'm looking at I've called it the great bond market, US bonds, divergence of 2024. So
Hmm.
we've seen a fall in the bond market over the last 3 years or more, and 3 to 4 years, whatever it is now. And there are technical divergences in the US 10-year Treasury notes. But I think what's also been interesting, and they're on high time frames, and we've come historically. If you take a 10-year Treasury note chart and you go back historically, we've come down. Price has come down into old historic, lovely congestion zone. I can't remember how many years it is now, 20, 30 years ago. So we're at a really good level. We've got
Mm,
technical divergences going on the likes of monthly time frames. And what I think is also quite nice, if you look at your COT reports, actually, there are divergences in the behavior of your large speculators out there versus what's gone on in the bond market in treasury notes in the last 6 months. So I think that that's a fascinating story. We'll see, because the fundamentals, could still be supportive of bonds, of course, still coming lower. But I've been trading, long enough to know that the fundamental story emerges, and in real time, a lot of the time, if there is a turn, the fundamentals are going to be wrong at the point of the turn. It's only
mm,
several months later that it catches up. So the whole story of, oh, will treasury notes go to 5%? Well, maybe, but maybe not. And so I'm going with that. And so on the back of that, I'm a dollar bear, which means on the back of that, I'm gold bullish, and have been for
mm,
quite some time. Obviously, we've had major breakouts to new all-time highs. I'm massive bull on silver, but I have been, and I bought silver in 2018, so so
mm.
I've been holding that physically for a long time. But so I would still love to see silver go ultimately to its all-time highs up at $50.
Mm,
And gold, I've got a projection around 2,700 or so. So there's a
wow.
massive technical pattern on the monthly charts of gold, which we've broken out of, as we all know, and so that does give upside projections. So the difficulty is timing of these things, and so
Yeah.
how long would gold, even if it goes to 2,700, it could go there in you know 2 or 3 months. It could still take another 2 years yet. We'll have to see.
Yeah.
But for 2024, yeah, I'm still a bull for gold. I'm a I'm a uh, I'm a bear for the dollar, and that's a big call. That is a
Mm,
big call in light of everything. When you look at the U.S. economy versus Europe, UK,
mm,
pound for pound, it's quite a big call. But again, I have my analysis to say, well, that's what I'm ultimately looking for. So
Mm, mm.
we shall see.
Inter-
The
um,
dollar's been choppy for a year, and so it's
yeah.
been range bound. So at some point, it's going to break out. We'll find out, hopefully, within the coming months, which way that's going to come.
Yeah, I mean, I'm hugely bullish on silver as well, and gold. I mean, I bought silver at 14 actually around COVID times, and much like yourself, I look at the charts, and I think last financial crisis it was up 49 or 50 or something like that.
Yeah,
So I thought, much like yourself, it would basically go up to at least 49.50, if not break that high.
yeah.
Why do you think it's sort of been stuck in that range between 25 to 30, 29 area right now?
Oh, well, it's a big conspiracy theory. It's it's JP Morgan that's
The
suppressing the
banks, the
price.
banks, yeah, exactly. That's what I've heard as well.
Yeah. No, I do you
Yeah.
know what? Yeah, silver's been a laggard behind gold. Obviously, it's got different uses, and gold has been a beneficiary from the likes of central banks in China buying it, especially this year, and Russia as well. So it has benefited
Mm,
from that status that it has, whereas silver doesn't have, of course, attract that same status from central banks buying. So I
mm,
think a lot of gold has come down to that, uh, but silver still has a lot of industrial uses as well, and so
yeah.
I'd still like to think that silver will play a large catch up. And we've seen even recently in the last few weeks how silver can really motor. And so I suspect that gold silver ratio will reduce over time, and it tends to do that. It's like an elastic band, and then it stretches and then contracts again. And I think silver will play catch up in the long run. And so
Mm, mm,
in percentage terms, I think silver has got the better percentage potential over gold
mm.
as far as upside gains are concerned.
Wow, that's fascinating. Yeah, I guess finally, before I let you go, what advice would you give to sort of new traders looking to, I guess, build a resilient mindset or kind of develop a long-term success in the trading world?
Ugh, yeah, one have a longer term time horizon. So don't try and get rich in 6 months or whatever. See it as a long term endeavor that
Mm,
it's going to take time. You're going to have stumbles, you're going to have hiccups, and accept that. So for one, see it that way, because otherwise, if you think you're just going to be rich in 6 months' time, then you're more likely going to become one of those statistics of the traders out there who do quit because they've given it
yeah,
a go and they've gone quite
or
quickly.
the 90% of who lose, in the disclaimers, right?
Oh yes, yeah, 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 yeah. They just don't have it's a fickle mindset. They want to try something now. If it doesn't work, they're off. So
Mm,
I think that's one thing. A long-term time horizon. Don't underestimate the power of the dark side. So the mindset side of things and what the
mm,
market will be trying to do, whatever it is, whatever technique, whatever strategy or method that you're using, the market will test you at times, and it's going to do
mm,
it frequently. And so I always say, look, the market's like the devil. He's constantly in your ear whispering, trying to get you to bank your profits too soon, to not use stop losses, to jump out of trades, to jump into trades. And so gamify it and make it, look, this is the devil. The market is the devil. It's trying to make me do the the wrong things. And so
mm,
constantly think about those sorts of things when you're about to go and make that crazy decision that you're about to do. Hold on a second,
yeah.
this is the market. Force it, trying to don't let the market win in that regard. Discipline
Mm,
is key. So, and all of that comes from investing in your mindset. So
mm,
too many people look for the technical strategies. They should be spending a lot more time on the mindset, because you can have a good technical strategy, but if you haven't got the mindset, you'll still
yeah.
mess it up. You still won't make money in the long run if you don't. So
Mm,
those are the
mm,
two big things really. It's psychological for me, mindset. Don't obsess about the technicals. I know there's something we
yeah.
all have to learn. Keep it simple. and you can make decent money by keeping it simple, providing you got the mindset.
And don't overtrade. That's what I heard a lot as well. Don't overtrade. And it's about living, living to trade another day, basically.
Yeah, absolutely, and staying in the game. Yeah, and so if whatever you are trading at, if you halved it, would it make a difference to your returns? And for a lot of
Yeah.
traders out there, they're busy fools. They're trading
Mm.
too much, and
Yeah.
so yeah, definitely, like you said, have a look at trade frequency. We've all traded a lot. I used to trade loads,
Yeah.
especially during the financial crisis. I was trading 15, 20 trades a day, and that was nothing
Wow.
compared to a lot of traders.
Mm.
But but you still have to reflect on it. And like you said, the more you trade, the more susceptible you are to mental fatigue. And if you have mental fatigue, then you're more likely to be making mistakes.
Yeah.
And that then all feeds into that.
Exactly. Exactly. Charlie, it's been an absolute pleasure. Thank you so much.
Well, thanks for having me on. It's nice having a chat and running through a few thoughts in the markets and listening to what you have to say there as well, because you're highly
Exactly.
experienced. So, yeah.
It's all about the community, right? This is how we help each other.
Yeah, exactly. I always think that if I do an interview or if you're interviewing someone, if a listener takes one point from that interview and says, "Oh, that was quite useful," that's it. Our job is done, isn't it?
Yeah. Yeah. Thank you
Well,
so much.
no, no, it's a
Uh,
pleasure, and thanks for all your questions there, and hopefully this has been useful to some of your
yeah.
viewers
This
here.
is great. This is great.